Good afternoon. Campbell McCreary here, Amvest Capital in New York City. Welcome to the Amvest Capital Inc. live webinar with Canada Silver-Cobalt Works Inc. The company trades on the venture as CCW, Charlie Wilco, and as CCWOF, F as in Frank, on the OTCQB. We hope you'll enjoy today's program. It will also be available in replay mode. Feel free to chat in your questions in the question pane of the GoToWebinar control panel, or just simply email them in and we'll ask them in real time. Just so you know, the event will be available about an hour after we wrap up at amvestcapital.com/replays. You'll also get it in an email. And as always, if you can share your feedback when you leave the event, it would be much appreciated and will be shared with management. Amvest, of course, is a New York-based specialist investment management and corporate finance firm focused solely on the natural resource sector. And please note this disclaimer: this call is most definitely for informational purposes only. Have with us today Matt Halliday. He's the president and COO of Canada Silver-Cobalt Works Inc. So if you want to share your screen, Matt, and I see you, we'll get started.
Great. Thank you so much, Campbell. Yeah, it's a pleasure to be here today. I hope everyone...
There we go. Okay. Perfect. You have the floor.
Perfect. Thank you very much, Campbell. Well, I'm very excited today to share the story of Canada Silver-Cobalt. We're a critical energy metals company focused primarily on silver and cobalt with a large package of copper, nickel, cobalt plays through Ontario and Quebec. We are a green processing technology company. We have a process in-house called Re2Ox, which is able to produce cobalt sulfate, nickel sulfate, copper sulfate from ores derived from the cobalt camp bearing arsenides. And most importantly, we have the highest silver grades in the world with the leading resource at 7.5 million ounces with 250 ounce per ton. So our disclaimer, this corporate presentation can be downloaded off of our website. You can read that if you wish. So we are proud to be in the cobalt camp. I think we're in the right location. This is a historic camp that has seen mining since 1904. When people came up here back in the early days of the silver rush, they were literally chopping silver off the walls with fire axes. There's some beautiful photos of this in the Cobalt Mining Museum. We have a lot of scalability in our project. We have our main zone is called the Robinson Zone of our Castle East project. And we have 2 kilometers of strike distance between that and our 100% owned Castle Mine. We have top tier grades, and this is what we call classic cobalt style mineralization, where we're hitting in the tens of thousands of grams per ton silver. And we have an excellent team with proven local success. So since I came into the operations here at Canada Silver-Cobalt, we've done a lot of things to invigorate this company. We've built our own team of geologists that are dedicated to the exploration of the Robinson Zone. We put on a maiden resource. We are the very first company to put a resource into the cobalt camp that's 43101 compliant. After that, we planned a 50,000 meter drill program. And we're continuing to advance the permitting to get a ramp down at the Robinson Zone. And we've continued to move the technology Re2Ox along and optimize it and get it ready for the North American EV market. A bit about my team. So I am a resource geologist. I spent about a decade working for SGS Minerals in Blainville, Quebec. And through that office, I learned a great deal about exploration and resource development. As part of the team that won the 2016 Integra Gold Challenge, we brought a lot of machine learning into the resource sphere. I worked for other majors like Kirkland Lake Gold and other exploration teams. Frank Bassa, our CEO, is a metallurgist, and he is familiar with this camp. He worked in this camp with Agnico Eagle in the 1980s when they operated this camp. And through his time at Agnico, I believe he's learned some extremely valuable lessons. One, he understands the metallurgy of this camp, understands the silver extraction, and very importantly, he understands the cobalt nickel extraction of this camp. And the business plan model that Agnico utilized at the time that was very successful for them to be operating here. Doug Robinson is one of our senior geological consultants, and since there hasn't been mining in the camp since the 80s, one of the last producing mines was the Castle, it's extremely important to have people like Doug Robinson on board as consultants. He spent 14 years underground as a mine geo. He understands the underground, he understands the exploration, and he understands it from a mining perspective. So as I've developed a young team of geos, I'd like to take his knowledge and pass that on to them and as well as to myself. And lastly, I'd like to mention Diane Tukney. She is a First Nation Ojibwe from the Bear Clan, the director of our company, and she keeps all of our community consultations and First Nation consultations and agreements in good working order. And it's very important here in Ontario to have that relationship. So this is the Cobalt Camp. It's about 200 kilometers across. It's a very large camp. It's made up of the cobalt embayment, the Huronian sediments, as well as intruded by Nipissing diabase later. The camp itself produced over 500 million ounces of silver. I would guess that the number is pretty close to about 650 million ounces. Predominantly, this silver came from the town of Cobalt. However, there were some major satellite camps, including Silver Center and where we are in the northwest, Gauganda. Gauganda produced about 80 million ounces of silver, and about 70 million of those ounces are within close proximity or on our property. So not only are we on the edge of the cobalt embayment, but we are also in a prolific Abitibi greenstone belt, and you can see that where the Castle Mine property is, due north is the Alamos Gold Young-Davidson mine and the Cadillac Larder Fault Zone, which also hosts Kirkland Lake's Macassa mine and Agnico's Upper Beaver project. And due west is the Rideout Shear Zone, where IM Gold has their Côté Gold project. So we're in a prolific zone, and I think that also importantly, we have the infrastructure, the people, the engineering, and the miners, and everybody associated with the industry to make these projects a success. So of our large property package, we are focused predominantly on our southern portion. In the area where I mentioned about 70 million ounces were historically mined. We have the Castle on the Castle mine fully 100%, and we are the only company in the camp who has direct access to the underground. The underground at the Castle is accessible through an adit and shaft number 3, and level 1 of 11 is dewatered. So I think that gives us a geological upper hand. We are able to see these structures in real time, real space. And I am working hard at revising the closure plan amendment on the Castle mine to rehabilitate that and get underground exploring again. So our new high-grade discovery zone, the Robinson, is about 2 kilometers to the east of the Castle mine. We hit up to 70,000, or we hit initially 70,000 grams per ton or 2,000 ounces per ton over 0.3 meters. It was a spectacular interval, and we needed to have immediate follow-up on this. And so at the time, we weren't using oriented core or any directional drilling. So we went back with a 360-degree televiewer camera downhole and mapped out the Robinson vein itself. We took the Robinson vein and modeled it into 3D and made our best estimate of how it is oriented in 3D space. And from that, we designed a small drill program that was done in around autumn 2019 to early winter 2020. And from that 3,000 meter drill program, we came up with our maiden resource, which is the 7.5 million ounces at 8,582 grams per ton. So upon the success of this resource, we initiated a 50,000 meter drill program. It's currently ongoing. We've completed about 35,000 meters of this program. And most recently, we've extended it another 10,000 meters. This map here, which is facing south, gives a little bit of perspective about the footprint of some of these past producing mines. They're not very big, and we do have a lot of ground to cover. And though I'm focused primarily on the Robinson Zone, I believe that there is excellent potential between the Robinson and the Castle Mine. So this is what the silver and cobalt mineralization looks like. It's spectacular. It's just a solid plug of metal. Brilliant silver. These pictures will never do it justice. You need to see it in natural light, be able to spin it, but it is breathtaking stuff. I love seeing it every time I get the chance. The first one here is 50,000 grams per ton over 0.6 meters, and that was one of our wedge holes. So we went in to the discovery hole and we wedged off so we could get close spacing on these high-grade panels. The second one here, wedge 2, 70,000 grams per ton over 0.3 meters, and it has these native silver hairline fractures that penetrate into the wall rock. This is an important piece, and these can penetrate up to a few meters into the wall rock, and they help with the managing dilution, and they are pure silver and definitely add tails of grade. This is our first resource. It's very silver heavy. We can see that the non-equivalent silver is almost or comparable to the silver equivalent, and it is some of the highest grade silver resource in the entire world. The cobalt grades are modest at this point. We do have a zone 2A, which has up to 0.5% cobalt. And as we continue to use this initial resource as a springboard into the future, we're going to continue to add more silver veins to the resource, as well as more cobalt veins. So as time goes on, we'll have significantly more tonnage in both the silver and in the cobalt. It's a small comparison of our grades compared to some of the international producers. I have not fully diluted this, but as one can see, our grades are extremely high. So after this maiden resource that we completed in May of 2020, we initiated a 50,000 meter drill program, and we wanted to accomplish a couple of key things. One was we wanted to continue to drill along the strike of these known veins, and we want to move in and out and target very specific horizons. So we have quite a rigorous program, as well as looking for cross structures. And we have a little bit of flexibility. We understand how to put the resources on these panels, so we utilize wedge drilling whenever is necessary. Because this is a structurally hosted deposit, we use oriented core for all of our drilling, and we have a strong focus on utilizing geochemistry, whether it's in-house XRF or at the lab. And we've been developing a geophysical program over the last, well, since 2011, and we've stepped it up, and we're going to continue to develop our geophysical program into the future. So going from basically having one vein, we've really increased the knowledge base here. So now we have about 7 veins that we've named, and I think it really kind of comes true to the old adage here in cobalt, is that we want to drill for structure and then mine for grade. So we're opening up all these veins, we're classifying them for their potential, and we're going back on them when it's necessary. So some of these could be, you know, we've hit 3,400 grams per ton over 0.4 meters. We've hit a just under 9,000 gram per ton hit in hole 22, and you know, we've hit some cobalt with gold. So we're continuing to grow what we know, as well as explore new targets. So in December of 2020, we hit the next high grade zone. We call it Big Silver. This is an example of Big Silver here on the left, and it compares it to the example of the Robinson vein on the right. Big Silver is extremely beautiful dendritic silver with little rosettes of cobalt and silver, silver centers and cobalt rimming. It's absolutely a museum quality piece. Unfortunately, as I tell everyone, I had to cut it in half and send it off for assay to be ground up and burnt. But there's a lot of good things that have come out of this. One, the new zone is only 60 meters away from the initial Robinson vein. They are not on echelon, but close, and they're at very similar elevations. So this is extremely encouraging. When we did our screen fire assay, the coarse fraction reported 90% silver. So the silver liberates very well, and we're very encouraged by this. And along route to this new vein system, we also intercepted three zones along a strike that we call the 17-meter zone. And so we're very happy that there's mineralization in between. So this is what we call classic cobalt style mineralization. When they mined here, they actually mined between 1 inch and 12 inches, with the average mining width being between 3 and 4 inches. And so this is exactly what we have, and we have the grades that they did. And so it's really exciting that this is something that we can advance forward. So we implemented the same methodology that we did with the Robinson vein, and we went back with wedges, and we wedged off of the Big Silver vein, and we've hit it multiple times. And so here on the left, we have a high-grade mineralization at 50,000 grams per ton over 0.4 meters, or at 30,000 grams per ton over 0.71 meters. And on the right, we have the next big intersection. The assay is still pending. That is for 39 wedge 4. It looks like it has a little bit increased silver content compared to wedge 2, but slightly thinner. So I'm expecting a very comparable grade to the 50,000 gram per ton that we had previously reported. So some of the newest news is we've had a big step out recently. We stepped out 650 meters from the Robinson zone, and we've hit a new silver vein out there. We believe that there is evidence that there is a corridor of silver mineralization based on our geological data that we've collected, and we're continuing to explore into that zone as well. So silver is not the only story here. We found gold. This is some of the first VG I've ever seen in the cobalt camp, and potentially that is because we are there in the Abitibi Greenstone Belt, just south of Matachewan, and so we found visible gold that just under 25 grams per ton over 0.3 meters. And I think that's an important piece. This is just south of where we want to put down a ramp, and it is very shallow, only 50 meters depth. Maybe more significant than that is in the same hole, at around 450 meters downhole, we intersected about 3.82 grams per ton gold over just shy of 3 meters, and that was inside of a cobalt vein inside the Robinson zone. So there's a lot of implications here. We could have a Archean remobilized gold, we could have native gold coming in with the arsenide, but regardless of the case, it's interesting that we have gold in the system, and the gold in the cobalt makes the cobalt a lot more attractive in a mining scenario, and it also has the potential of having showing up with the silver. So if we continue to follow this structure, then we could potentially find silver veins that could also have gold in the silver pore. This is a conceptual design of a ramp. We want to go down with the ramp as soon as we can and get the silver out of the Robinson zone. The Robinson zone is the purple unit there. The green to bluey units are the contacts for the Nipissing diabase, which is where most of our silver mineralization occurs. And one of the key things here is that we can both pay back the ramp cost with the silver extracted from the Robinson zone, but we can also use it as an exploration device. And so using it as an exploration device, we can get underground, do long hole drilling, drill fans, and really open up this deposit. As I mentioned earlier, it's the saying here is drill for structure, mine for grade. So the quickest, cheapest, fastest way to really blow open this deposit is to get underground and drill it off, as I said, doing that kind of thing. Not only do we have the advantage of doing that, but we can go back to how they did it in the past. They had visual cues with visual mining, but we have a suite of geophysics and geochemistry that we can utilize underground. So we'll be a lot further ahead than they were in the past. This is just from the plan view. As I mentioned, kind of south of where we want to have the portal is part where we have our visible gold. So what are the next steps that we have? We want to continue to get the castle ready for drilling. We want to devise new targets and be able to expand the potential of the Robinson zone. We're actively working on the permitting for the ramp. We have the environmental permit or the environmental baseline study underway, and it is going to schedule. We're developing a tailings program to continue to put ounces into our resource and to find new potentials for cobalt and silver extraction. I'll briefly mention that, as I did in the beginning, that we have a proprietary technology, Re2Ox. It's a closed loop hydrometallurgical process. It's a very green process, and it has the ability to produce EV metals as well as rare earth alkaline metals. And it is being optimized right now for multiple feed sources. So we're working on feed sources from the tailings, from the underground mine, as well as the recycled batteries. So we're working on having a primary feed supply from mining, as well as a secondary feed from the battery industry to produce commodities such as cobalt sulfate, nickel sulfate, copper sulfate for the EV market. Recently, we've realized that the arsenic itself is very useful for the American market. And so we have the ability to be able to produce stable form of arsenic, so it doesn't have to be reporting to the tails, and we can make a saleable product. Continuing to become a vertically integrated company, we've purchased an assay facility / bulk sampling facility in cobalt. This facility has a strong historic significance here in town. One of the things that this facility did was it poured the high-grade silver for Agnico as well as for Teck when Teck was operating in the camp. And we have used it as a proof of concept. We poured 3 silver bars in Q4 2019 from our waste material at the facility. Recently, we've hired a company, On-Site Labs, as a third-party independent contractor to operate the assay lab. And it is a potential place to put the Re2Ox commercial pilot plant into production. And not to mention to high grade our material from the Robinson. To continue our objective of trying to find new sources of cobalt, copper, and nickel, we've picked up a large number of properties across Quebec and Ontario. We think these are strategic properties that could be of use for feeding the Re2Ox process as well as growing the company. And here is our share structure. So I guess I will open up the floor to questions.
Excellent. Thank you all for sending your questions in, and start with one that was sent in earlier today. What is the dewater status, or is the mine completely dewatered?
The mine is only dewatered, only the first level of 11 levels. I will be revising the CPA to be able to dump the stopes and drop the floor. I want to do this so we can get back into the first level for drilling exploration. Potentially in the future, I would like to take a bulk sample from there. And if I get to that stage where I'm going to be applying for the bulk sample, then I would apply for a permit at the same time to pump the additional water out of the Castle mine.
Some of the pictures of drill core indicate that the drill hole was drilled down dip of the orientation of the vein. Is this true, and why?
Some of the holes have drilled down dip. That is never our intention. So, you know, when we design our drill holes, we try to go perpendicular to the vein system itself. I think that, you know, when we initially discover some of these veins, we do have some down dip component, and then we try to take the structural data, or we could be constrained to where we can drill, and so we have to make a decision on that. But our typical practice is trying to get perpendicular to the vein structure.
Would you go after the gold or silver first?
Well, definitely the silver. The silver is my main focus. I'm working very hard to expand our silver potential, and all of my targets are designed around silver at this moment. I will be designing a small program to explore that visible gold, and particularly in the case that it is en route to the silver, but it's not a primary focus.
Was the cobalt historically recovered? And if not, are there waste piles of high-grade cobalt lying around?
Yeah, that's an excellent question. So the answer is a little complicated. So most of the mining activities here, they didn't recover the cobalt. That's not to say all of them didn't. There were places that recovered cobalt. But what typically happens is that you have a zonation of cobalt that's extremely rich versus zonation of silver that is extremely rich. So when the silver was mined, they would rich silver first. And there's a microphone on. So they would mine the richest silver first, and then it would only have a small component. There's potentially waste piles, piles around that contain significant cobalt, but I would imagine the majority of the cobalt that is of interest is still in the ground.
Thank you. One more question. Why did mining cease in the district? Can you go back into historic mines?
Right. Well, the mining operations here in the district was off and on over the course of the life of the camp. And so, you know, different commodity spikes, war times, et cetera, had affected the camp. And so the silver prices really dropped out there in the 80s. Many people are familiar with the stories about why. A couple of brothers may come to mind. However, I think that was basically the case at the time. So one of the last major producers in the camp was Agnico, and Agnico at that time was also had a gold division, silver prices were tanking out, and I think they switched their focus. And so they were the dominant player at the time. And really, there hasn't been enough exploration in the camp to rejuvenate the camp. A lot of the exploration, even at that time, was brownfields exploration. So even in the end of the mining of the camp, they were going from past producing mine to past producing mine.
Okay. The company has many exciting projects, but wanting to see a clear roadmap with goals for the next 1, 3, 5, and 10 years on what you plan to achieve and how you're going to get there. So a rather large question, but there you go.
No problem. Well, short-term goal, I want to continue drilling, and I'd like to deliver some exciting news about the drill results. I expect to be completed the drill program Q4, Q1. Upon completion of this drill program, I would like to put up a revised resource update. I am looking to have my environmental baseline study completed by Q2 2022. I'd love to see ramp development Q3, Q4 of 2022. In the meantime, I think that the Re2Ox process should be finish the optimization steps by the end of the year, and I'd love to see the design and build of a pilot plant and have that brought up to cobalt sometime in 2022. I would like to continue to work. So if we go into the further realms here, over the next 3-4 years, I'd like to see a mine in operation. I'd like to see advancement of taking the Re2Ox plant and producing a full-scale production facility. And I would like to continue to diversify my property portfolio and grab as much land as I can, because I believe that my team is the team to find the next silver cobalt deposit.
Thank you. Passing to you, Adam.
Thank you, Campbell. So, Matt, thanks for your presentation. In the other mines in the camp, were they all mining a similar, kind of 3-4 inch super high silver cobalt vein?
90% of them were. There's a few situations where things got a little different. As I mentioned previously, Teck was producing at a mine called Silverfields. Silverfields is a little bit of an anomaly, a little bit lower grade, a bigger halo there. And depending on the type of unit, because these aren't stratabound per se, but when the silver mineralization reaches the Huronian sediment, sometimes it has a little bit of a blowout, so it gets a bit wider, but the grade drops down. That being said, yes, most of it was mined at that 2 to 3 inches, and they had very similar mineralization to what we have today.
And you mentioned the dendritic native silver that goes to the side of either vein. Is that, or sorry, the either sides of the vein? Is that something that is relatively consistent? Is that something that's been mined in the past?
Oh, absolutely. I mean, that's basically part of the cooling texture there, and so there's definitely mines that had similar types of textures.
Is that a gradational kind of feature where and if so, can you say what perhaps the average grade would be, if you were mining this, sort of to a 2 meter minimum stope width?
Well, I can't really say that at this time. I still need to have a little bit more design done, but historically, these mines mined between 15, 75, or even above 100 gram per 175 ounce per ton. So I think that we're looking at a very similar type of thing where we might have a high grade, at 75 ounce per ton. That would be my guess.
Mm-hmm. Mm-hmm. And is that it sort of conceptually? Is that what you're thinking? Sort of like a two, or what was the historic mining method, and are you going to continue that?
Well, these are near vertical veins. So I imagine, with developments, we're going to have a lot of stoping that's going to happen. So, we're going to have narrow developments and some pretty good stopes.
Are you thinking, on vein development and, and just sort of open stope, as much as you can?
That's my concept to right now. But that being said, I still have a scope of work it's already been finalized, so I'll be talking to the engineers shortly, and I'll have a better picture of what's the most feasible going forward. We still have a lot of people in this camp that are familiar with the past mining methods and are modern enough to understand what we're doing today. So I'll be taking a lot of feedback over the next 6 months and have a better picture of that.
What was the historic, process flow sheet, Matt?
As in, like, how did they extract their silver?
Yeah, I mean, did they just crush this and shove it right into a furnace, or how did how did it work?
That's basically it. They had stamp mills, and then modern ones had ball mills, and I mean, there's some jigs and tables, and you do a gravity separation, and then you start pouring high grade.
So could you run batch, just run campaigns if you were switching back and forth from the gold to the silver, assume, because it sounds to me like, if should be pretty much the same flow sheet. You just you crush it and gravity separate, except the gold is going to be a lot more waste, obviously, but you still want to, if it's all free gold, it shouldn't, it doesn't sound that different to me.
Well, I mean, that's still to be seen. So, we had the visible gold there in near surface, but I don't have a full understanding of the gold that was in the Robinson zone itself. So if it's trapped in the arsenides, then it would probably come out with the cobalt con. If it's free gold, then it would come out with the silver con. So still to be determined.
Mm-hmm, mm-hmm. And question for you, Matt. What do you do with the cobalt con before you developed your own? Before your own system is up and running.
Well, I think we're going to have to have a lot further discussions about that. I'm not entirely sure where it can be placed. I think one of the main reasons and drivers for having the Re2Ox process is that the arsenic content in the cobalt ores are typically too high for the local smelters. So there would have to be somebody either offshore that's willing or has a flow sheet capable of taking the arsenic con, or we get the Re2Ox process up and running and are able to process it ourselves.
Mm-hmm. So unless you're going to send it to Namibia or somebody like that.
Well, I haven't really investigated too many of the offshore opportunities.
Gotcha. Okay. Campbell, maybe you've got a couple more questions from the audience?
Yeah. Could you just tell us a bit more about institutional and large shareholders? And while we're at it, take us through a little bit more on capital structure, outstanding warrants, et cetera. So that sort of first page in a little more detail.
Well, I mean, we have about 38 million warrants outstanding. I think most of them are at around 65 cents. And we don't have very many large institutional placements. We've had a placement with Palisades Gold, but most of it is held by private individuals.
All right. Adam, do you have any more questions before we wrap up?
Yeah, I was just thinking, Matt, that the historic mines, excluding the price of silver, or can you go into a bit more depth about why some of these historic mines closed, as far as specific to each mine? Where did this narrow high grade vein pinch out with depth? Did the metallurgy change? And what about laterally? Did it get faulted off and they couldn't find it again? Sort of why did some of these historic mines change, or was it all just periodically due to dips in the silver price?
Well, I think that it depends on the era. I kind of gave a brief exploration or that kind of scenario where Agnico kind of swapped over to the gold world, right, at the drop of silver price. The further we go back, this camp actually had well over 100 mines. And so these mines were postage stamp mines, and they were always competing for the party line. So I imagine a lot of these mines had difficulty when they didn't have the opportunity for consolidation. The earliest ones would have been on surface and they were mined out. But without proper consolidation, it makes it very difficult to continue exploration. So I think that's a big key there. And so far, they're not very deep. But that being said, where we are at the Robinson is one of the deepest. So the question remains is, did they just not go very deep because they didn't have the visual cues and the technology at the time? But there is what we like to say is there's a proximity of 200 meters from the diabase sill is your productive zone, right? So you can go into the Archean volcanics and the volcano sediment package, and you have about 200 meters above and below your diabase layer, and the same with the Huronian, as if you're in that same proximity. So that depending on the situation, you might have up to say 600 to 700 meters of a productive horizon, and so there is that limiting factor there. Well, that doesn't sound that limiting. 700 meters is quite large, but you need to be in the right location and have the right technology to exploit it.
So I understand, fractionated ownership can certainly cause you to, mine up to the border and then you're stuck, laterally per se. But it was never, a technology issue as far as water table or anything like that.
Oh no. I think it's the mining technology has always been there. It's the exploration technology that needed to catch up. When they explored, the early explorers were stripping like mad. They blasted basically the entire soil surface off of the hills next to cobalt and dumped it in the lake, and they trenched everywhere. Everywhere. And so, their cues were seeing silver, and that was basically their main exploration technique. And it wouldn't have been until the later days when the drilling got better and better that they could use that. But by that time, a lot of the companies were focused on brownfields exploration because there were so many known targets.
It just seems like there's got to be so many targets at current silver prices that that are effectively brownfields, where because of fractionated ownership or whatever, there's some, and exploration technology that you mentioned, that there's got to be a lot of silver there left to find, sitting right under, some of these, or right adjacent to some of these older mines.
Well, given the size of the camp, I think maybe I'm fanciful, I'm not sure, but I believe that there's another 1 billion ounces there. At least, because it's a monstrous camp, 200 kilometers across, 5 major satellites, and a lot of places that have seen little to no exploration. And that being said, I mean, if you go much further into the future, there might be opportunities well deeper than I'm willing to explore.
Matt, can you talk a little bit about your ballpark expectations for upfront capital to get, one, to get sort of the mining going so you can start generating cash, and then two, to get your process going on the pilot scale?
Well, on the pilot scale, I would gather that we're looking at $1.5 to $5 million to get the pilot plant up and running. Those numbers won't become more concrete until we're finished the optimization process. And to get the mining up and running, we're looking at between $14 and $27 million to basically develop the ramp. Depends on whether we go with a shaft or a ramp, or how deep we want to go. So we're looking at around $14 to $27 million there. And environmental baseline studies under $1.5 million, and engineering costs could be about $500,000.
And Matt, what kind of mining rate does that ramp or shaft give you?
Well, I think that because of the small and the concentrated nature of it, it has to be controlled. I'm sure we can mine it faster than we need to. So we'll have to determine what is the most economical point, I guess, and try to stick to a number, whether it's 2-3 million ounces a year or 5 million ounces a year or something like that. But we'll need to evaluate that.
Mm-hmm. I mean, does that give you something like capacity for 200 tons a day or something like that?
Yeah, something like that. It'll be a small scale operation, and it depends on how we eventually do the milling. We'll need to determine whether we want to be operating at basically above or below the 150 tons per day.
Okay. I know there was something else I was going to ask you, but I can't think of it right at this second. So
Right.
Let me pass it back to Campbell.
Sure. Want to thank everyone for tuning in, for your great questions. Thank you, Adam, and listening audience, and Matt. Well, on your way out, please share your feedback with us. You'll be queued when you log out of this session. And the replay will be available at amvestcapital.com/replays, and you'll also get it in an email. And with that, Matt, I'll pass it back to you for the closes. Anything you want to add?
Oh, thank you very much, Campbell.
Yeah.
Well, I'd just like to add that we are again in the middle of a large exploration program. I think some of our best stuff is yet to come, because now we're drilling a lot of priority targets, and I'm very excited that everyone is paying attention, and that we might be able to get this ramp materialized at the proper time in the silver cycle. Thank you, everyone.
Go silver. Thank you very much. Good night, everyone.